Welcome students, Tom Harmer here, your accounting professor, and this will be a demonstration of how to create a note payable amortization table. Now, this note here could be your car loan. This could be a home loan, any amount. You can see I can change the amount. You can change the amount using this sheet for whichever loan you might want to be analyzing. But your assignment, I will give you all of these same formulas and whatnot. So this is a $25,000 car loan, okay, and we had an interest rate of 5%, and we had a payment period of, let's say, 5 years or 60 months. Boom, there's your monthly payment right there. So tell you what, I'll do a demonstration just on that right there. So now we have to create the formulas in this spreadsheet to show the amortization of this loan. So the first thing we have is our beginning balance when we purchase the car. There's your $25,000 right there. Now the payment I've already calculated for you. By the way, I'll show you the formula for that. I've got here, let's come up, I've got an interest rate of 5% per year. I've got an interest rate per payment per year, so that's going to be the rate per year divided by 12 months. Okay, so that's what this is. And then the number of payments, we just entered that. We knew it was a 5-year or 60-month loan. The payments per period, that is a formula. If you look in the upper part here, you see formulas. If we pull that down, that comes to another menu for financial formulas, and we can go select the payment. Come down here to payment right there. That's the payment formula. So that automatically calculated that payment for us. So now we have to create the amortization schedule. So I've got payment number 1 here, and remember, I want to create a line of formulas here that I can copy down. And if I reference anything in these upper cells, when I copy it down, the relative positioning of the formula changes relative to these numbers. I have an advanced video demonstration that shows you how to create amortization schedule that will read all of these numbers and copy it down. So then you can just change these numbers and boom, it kicks out this amortization schedule. But in this case, we have to create formulas across this row that we can copy down. I'll give you some demonstrations of some errors, but first of all, I put beginning balance over here in a separate column because that's text. If I try to create this formula, which is equals the number above it plus 1, so there's my formula right here. That's A10 plus 1. Hit the enter key, you see it gives me an error message because mathematically it can't add text, it can only add numeric fields. So I delete that, come over here and put my formula in, equals field above plus 1. Okay, and that's my first payment. Okay, now I'd like to be able to see what year we're talking about too, so I'm going to go year, and I'm going to go equals payment divided by 12. So after I get to my 12 payment, it'll say year 1, year 2, year 3 as I go down. Okay, so my payment, I'm just going to type in the payment rather than try to refer to that field because we're not, that's more advanced, and I'll show you that in the advanced demonstration. But I've got to the payment is 471.78. Okay, that's my payment. Now what is the interest portion of that payment? I'm going to show you a few errors here first. Instructor designed errors, by the way, though I do make some improvised on the fly. Here we go. So I'm going to hit my equals number, equals key. That tells me we're in the formula mode. And come up, times the balance, okay? And now I'm going to hit the star key. That star tells it that it's multiplied times our interest rate. And we've got here the interest rate per month, okay? And I'm not going to reference this field up here because I know that as I well, as I copy it down, it'll have an error in it. But in any case, so it's 0.04167. Okay, boom. Now that, look at that. That is ridiculous. You're making a monthly payment and you're saying that the interest portion is $1,041.75. Obviously, I have a transposition error. 0.4167% is actually 0.004167. So I'm going to put another 0 in there and then do it. There we go. So we have paid $104.18. So when you're entering your formulas, look at the logic. I mean, is this answer, is it reasonable? If you do that, then you can help yourself find mistakes as you go. Okay? So the principal portion of that payment is going to be equals to the payment minus the interest portion of it, and there's the principal right there. So now we want to calculate our principal balance of our loan after the payment. So that's going to be equals, okay, the principal balance prior to the payment minus the principal paid, enter. Okay, there we go. Now I have a line of formulas that are copyable. Okay, so I'm going to highlight that. I'm going to hold on my control key and C for copy. Control C. Now we can go up here and use the menus for that, but when I give you these control and alt commands, they can be used in any version of Excel or Word. So control C standard throughout. And then I drop my anchor down here. I can hold down my shift key and come down, let's just go down a long ways. Boom. Okay, so now we've copied that formula down. There's your end of year one. You can see what our balance is. You can see these balances going down. Okay, now in your assignment, you're asked what the principal balance is at the end of year 3. So I'm looking at 1, 2, and 3 right here. There's the third year, 36 months. There's our principal balance. Okay, so we can delete everything below that. Boom. There you go. So there's a demonstration of creating a note amortization table. And this is a very practical tool you can use for yourself in planning. The advanced version of this is going to show you how to put in principal prepayments, because you hear a lot of advertising, pay off your 30-year mortgage in 20 years. Well, we can do that here too. Matter of fact, I'm only 8 minutes into this little video. I'll just demonstrate it right now. I click on a column and I go hold down the Alt key and the I for insert and then the C. Boom. And it inserts a column. Okay. Prepayments. Okay. So now let's say at the end of every year we make a prepayment of $500. Okay, 500, and then year 2, 500, okay, and then year 3, 500. Now you notice it didn't change anything because this prepayment column is not in this formula yet. So let's change our formula. Equals, and I'm going to go minus. Well, come on, let's go here. Oh, I see, I'm going to start over again here. Okay, it'll screw up. Hey, you'll do this too, don't you worry. You'll go through this. So I'm going to delete that formula, and I go equals the prior principal amount minus the principal payment portion minus the prepay payment cell. Boom. There's my new formula. Control C, down, hold down my shift key, page down. So I don't need to go quite that far. Enter. Okay, so there's 500. Look at that, it's bringing it down. Now if I take this out, Control C, down arrow, page down a couple. I'll go down 2. Okay, up there's where it goes negative, so I don't need anything below. Or I'll take this one here. Go down, delete all of that. Boom. So there we go. we paid off a 5-year loan in 3.8 years by, oops, look at this. I copied that $500 payment there. So I'm going to get rid of that. Okay, copy it down a little farther. Not paid off yet. Okay, there we go. Here it comes down to 0. So I can delete all of that. Boom. So 4 3/4 years by paying, let's see, I paid 500 after the end of the first year, an extra 5 there, another 5 on the 3rd year, and another 5 on the, where's the 4th year? Right here. Boom. 500. There we go. So we paid it off in about 4.5 years by paying an extra $500 per year. Okay, so that went from 5 years down to 4.5. So you do this for your home mortgage, and then you can see the impact, how many years your mortgage would be paid off. So that's a little bonus for you there. So with that, go ahead and proceed with the preparing the note amortization schedule in per your assignment. Thank you very much, students, and good luck.